So if you were to get in tomorrow at the price that it closed at today, which is like 104, you'd be getting in right around here. Now you could easily say, okay, if price were to drop below any of these last three candles, it is most likely meaning that those candles are irrelevant. They've been erased in sentiment, and then the price will fall. So what does that mean? It means that'd be your stop loss. So if you got in at 103.35 is where it is right now, and your stop is here at like 102.5, this is your risk unit. That's the size of your risk unit. Let's just roughly call it $1. But your reward unit is how the price has been appreciating at the rate that it's been appreciating on the top side of this parallel channel. So your reward unit is something like this, 113. So 113 minus 103 is like 10. So you have 1 unit of risk on the downside and 10 on the reward side. Anytime you can find something like that looks like it could potentially give you 10 to 1, you've got to take that. This is a very good proposition. You will only lose $1 on the downside, but win 10 on the upside for something that really, based on the way the price has been going, is very probable. In other words, if there's a 50% chance of this happening, it means that 5 times out of 10, you win in the future, 5 times out of 10. And this looks very probable. It looks like at least 50% chance, okay? Maybe even more, 60% chance. But so what I'm saying is, therefore, then if you take the 10 units and you multiply it by the 5 times you win, that's 50, right? And then you take the 1 unit and you multiply it by the 5 times you lose, that's 5. So again, you have a 10 to 1 risk reward ratio. So that's how that works out. Now, if it was a 10% chance to win, now it's a coin flip, because if there's a 10% chance of winning 10, and a 90% chance of winning 1, it's almost a coin flip, you see. So, but as you can see, you can be wrong 90% of the time with a 10 to 1 and still break even, right? But that's why you want to have the situation be more like a 20, 30, 40, 50, 60, 70, 80% probability. The probability times the risk reward equals your win rate in your profit factor. It's all mixed together in this chain.